How's it, guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. It's going to be the US dollar, Japanese yen, and then the euro, USD dollar. Before we hit the charts, just go visit my website. It's on the bottom left corner over here, where you can find previous analysis. You can find strategies. If you're new to trading, there's some nice video categories that you can go to that will teach you how to trade, and it will tell you everything you need to know about the trading. Preferred brokers, go check them out as well. These guys that I'm using is very reliable, and it's always good to have a reliable broker behind your side. Then also COT reports. We're using COT reports in our analysis, top-down analysis. So just go to the resource tab and we can download the COT reports for free. So let us hit the charts. So we're starting off on the US dollar, Japanese yen. Now we know that the Japanese yen is still in a very weak condition. And we can see that little bit of, on a daily time frame, we can see that little bit of push going up now, price closing just above those little highs, and we might see a continuation upwards. I don't see any movement downwards for the Japanese yen going into or towards the end of the year, but time will tell. On the 4-hour time frame, let's have a look at what we can see. Just maximize it or just make it a little bit bigger. So on a 4-hour time frame, just zooming in, we can see a nice little area that has been broken over here. Just want to highlight that area. Okay, you can see that that area has just been broken and closed above it, closing the end of the week. And then we can also see a nice little setup that you could have taken, taking your Fibonacci from this low to that swing high. And as we can see, price going swing high, swing low, swing high, price retracing, and just zooming in a little bit. We can see how price with this little candle just tapping into that 62% area where you could have caught a nice little buy upwards. And I mean, that buy, if you had taken it, what a sweet little entry, would have been 70 odd pips up already. Okay, so going down to our lower time frame, which is the 1-hour time frame. Okay, we're looking at our previous analysis where we end up last week. So basically price just going up and down this area. And then I just want to show you a nice little entry that you could have taken. You take your Fibonacci from that swing high to that swing low. Okay, swing high, swing low, price retracing all the way to the 62% area. So this is for those of you that's really intraday traders, day trading, catching nice little amount of pips. So price going downwards, you could have caught a nice little amount of pips there. Then another entry would have been a fair value gap that was created in between these two candles, going upwards. So you can see a nice push of this candle closing above that area, and a fair value gap created between these two, the previous high and the previous low of those two candles after the nice push, price retracing into that area and then going upwards. If you did miss that one, you could have caught a nice little one. You take the swing low to that swing high. Okay, it's a swing low to that swing high over there. Just take this out and you can see price again, just consolidating and retracing back to that 62 to the 79% area where price just started moving upwards. So now what we're currently looking at is, again, we focusing on this high for next week, right? That's going to be the high that we're looking at, and we're going to be looking at this low over here where price made a nice little candle. This was obviously going into Friday with with all the news happening. So we're looking at these two areas in the market. Wherever price breaks above or below it, we will react to price and see what happens to that. Okay, let's move on to our next currency pair, which will be the euro USD dollar. This will be this one. We're starting off on the daily time frame. Again, top-down analysis, daily time frame moving downwards. So on the euro USD, we can still see a little bit of a downwards movement. This little trend line still active, price retracing to it, tapping into it, and then moving downwards. So you can see a bearish movement still in this currency pair. We have got this little push. So let's have a look and see, towards this week, if price is going to start moving upwards and if there's any turn in the market. Let's look at the 4-hour time frame. 4-hour time frame, we can see that price just retraced back to that previous low over here. So price going up, going down, not breaking below that area. Okay, just do that. Not breaking below, just tapping into that liquidity that was lying below there, not breaking below it, and let's see if price is going to continue downwards. If price continue downwards, we will definitely react to that, but we will do that on a lower time frame. Okay, so let's look at the hour time frame. Let's have a look here. Just want to do that and that. Okay, so we have got this area. Okay, that was our previous analysis that we ended off last week, and we had this nice little area here. So we can see price breaking above it. Okay, we can see price moving above that area. Entry that you could have taken, there was a nice fair value gap entry that was created after price broke this little structure over there, price retracing back into that fair value gap and then moving upwards. If you did miss that, just zooming in, okay, you could have had a nice little Fibonacci movement, which is from this swing low to that swing high. So it's the swing low, swing high, price retracing back into the 62% area. Again, sweet little sniper entry, as you can see. Just zooming in a little bit, as you can see that candle just pushing into that area over there. Okay, so then price moved up. Okay, it started consolidating at the top here, and then it made a nice movement downwards. Now you can take your Fibonacci, because you can see that price moving down, created a little support with this bullish candle in between the bears. So now you take your Fibonacci. So let's say that's the swing high and that's the swing low. Okay, swing high, swing low, price going, retracing to the area between the 62 and the 79% area, where price started consolidating and then broke that area. So price moved downwards. And if you missed that entry, there's so many entries that you could have taken, guys. So price eventually made a nice little support area over here. Okay, and then we had a break in structure. Just going to take out this Fibonacci. So we had a break in structure with this bearish candle, and then with that break, it created another fair value gap. So that's going to be the area between the two candles before and below, before and after that nice push. Price coming, pushing into that area, and again, you can see, you can just draw it sideways. So it was just, you know, doing its thing and then retracing all the way, the whole time back to that fair value gap, and eventually going downwards. So now what we're going to be looking at this week is we're going to be focusing on two areas once again. We're going to be looking at this high. Okay, I would like to see price breaking that high, or I would like to see price breaking that low. Okay, those two areas, and once it does, we can react to the market. So that's all from my side on this these two currency pairs. If you enjoyed this analysis, don't forget to hit that like button, hit the subscribe button, hit the notification bells. There's definitely more video content coming your way, or trading content coming your way. So guys, subscribe to my channel and make sure you've got that notification bell on. So guys, hope you've been having a wonderful weekend. Stay safe and happy trading, guys.